Hi, I'm Robert Maltby. This is Maltby's Minute on the Market. Day 60 from the Singular Research Bunker. Best of health and wealth to you and yours in your bunker as we endure the lockdown in a divided United States of America. Roughly half the country open or partially open, mainly red states, and the other half on the coast, the east and west, and formed confederations are not totally open yet. Interestingly enough, the mayor has decided to delay opening another 3 weeks based on the science, where in other states with not as good figures as California, they've decided to open. So there's a bit of a variance in the interpretation of the science and coming up with the results. Meanwhile, our rights, I think, in my opinion, are definitely being squashed by various levels of folks, mayors, governors, and we should cry out for a little bit of assistance from the federal government here to break the shackles. Everyone should have the right to decide what they want to do, and we should protect the sick and the infirm and the vulnerable to the virus here, because the damages to the economy, if this goes much further, are going to be quite severe and possibly and hopefully not insurmountable. Anyways, on to the markets as we look at an earnings season wrapping up. We've got many companies, we'll call it the long quiet period ahead, as many companies have suspended guidance for the remainder of the year, while the chief market strategist at Goldman Sachs effectively issued a sell on the market, anticipating a 20% downturn. Both good and bad earnings are causing companies to move higher. This is what we call positive dissonance. 66% of the S&P have reported better than expected. This is pretty much on par. Since making the low in late March, which we were within a couple of days of hitting with our update there, the market's increased nearly 30%, while earnings estimates have been chopped 16%. Poor combination. Also, with the estimates for 2021, the street is looking for a bounce back, really to the 2020 estimate level. So a bit of a dip or a V or a U coming up. Half the country reopened and half not, and to half or half not. In our coverage, we've had some great earnings out of Beyond Meat, A-Mark Precious Metals, NMI Holdings, Luna Innovations, and Roku. Most of those beating estimates or meeting estimates and trading significantly higher, led by Beyond Meat, which was up 30% last week. As a harbinger of things to come, the Citigroup Panic Euphoria model has registered its highest level of euphoria in the last 12 months. Investors are more bullish. So consider taking some profits and hedging after this 30% rally. Now for a stock of the week, we want to suggest a sell on Zoom Video Communications. Zoom has lived up to that name over the last 6 months and overdone it. It's trading about 70 times revenue, not earnings, revenue, while it's attracted some big competitors, 800-pound gorillas, namely Facebook, Google, and Microsoft. Wouldn't want those to be my enemies. So we think selling Zoom, taking profits here would be a good idea. And maybe shorting it would be a good idea to take advantage of the correction that we believe is coming in the market. You can get a full report at Zoom at our website at singularresearch.com, and reports on the other names we have mentioned as well. I'm Robert Maltby with Maltby's Minute on the Market, and have a great week.